What is a covered call, and why do people choose to do them? A covered call is an option strategy where you buy a stock and sell an option on that same stock. The goal of a covered call is to generate income. We give up the potential for the stock to skyrocket for the certainty of collecting income. What kind of returns are realistic for covered calls? You can expect covered calls to generate annualized returns of 18% to 22%, and sometimes considerably more. Here is a chart showing some recent covered calls and their returns. The 18 to 22% range we mentioned is highlighted on the chart. As you can see, returns are higher for stocks like tech stocks that are more volatile. Returns are also higher for positions you hold for a relatively short time. For ETFs, and for stocks that don't move much from day to day, like the food stock and telecom stock in our graphic, the annualized returns can be lower, in the 12 to 18% range. Here are some recent results. If a stock provides a dividend, you get to keep the dividend as additional income. Let's recap now the benefits of a covered call. In terms of profits, you can often make 20% plus annualized returns. How often can you find stocks that rise 20% in 1 year? And how many such stocks can you find? You are likely to have both higher annual returns and more consistent returns than just buying and holding the stock. You still collect any dividends that are associated with the stock, and you can make profits over a wider range of outcomes, including making maximum profits even if the stock goes nowhere at all. Now let's talk about risk management. You enter the stock with downside protection. You pocket the premium you collected for selling the option, even if the stock price does go down. And the time to recover from any losses is unlimited because you can sell options against the stock over and over. Finally, let's talk about peace of mind. As long as the stock stays above the strike price of the option you sold, you don't need to do a thing to manage the position. You don't have to continually face the decision, shall I get out of the trade now? Or continue to hold for further gains? Or risk losing what I've made so far? It's easy to enter and exit the trade and to get your broker's approval to do these trades.